Hey guys, Jason Bowen with Hard Money Bankers. Sitting next to me, Dino Broccolino, one of the leading mortgage advisors at SunTrust Mortgage. I invited Dino down today because not only is he the man, he knows mortgages, and there's been a lot of stuff going on between real estate and mortgages going into 2019. So let's just get started with this, Dino. We're a few weeks into 2019. Kind of what do you see going on right now, present tense?
It's kind of definitely a couple different things happening right now.
Okay.
The market has actually picked up a little bit more in terms of a spring market early. I would say, I don't know if it's an early spring market, but we're just busier than normal for a January time frame. And then you have the government shutdown, which is impacting us in certain aspects of the mortgage, either the process, and even some people that are already obviously have loans with us that are being affected because they are furloughed right now, some of those people. So they're being impacted by not getting paychecks, and now having gotten 2 paychecks over this past month. So that's impacting them in their ability to pay their mortgages on time. So like I said, there's a couple things regarding new loans as well. Certain government agencies are not even allowing us to originate loans, USDA being one of them. So they've told us, basically, they've sent out communications to us saying no origination of USDA loans until we've got people back in here working. So, and again, there's other aspects of it. I don't know if you have any other questions specific you want to ask.
Yeah, let's break down that real quick, though. If you're a homeowner or you're an investor, keep in mind this type of financing affects you. Obviously, for reasons, if you're a homeowner, you need some sort of conventional financing. But if you're an investor, typically you're flipping houses to a homeowner, so you need to make sure if you're in the middle of a flip that you're able to get these things resold. Mm-hmm. Or if you're not flipping in, you're holding it as a rental. The mortgage markets affect everybody, investors and homeowners. Okay, so let's go through this. So yeah, what are we in day 30-ish? Over a month into the shutdown. As of now, it looks like everyone who works for the government's going to be missing their second paycheck now. And I know, the Fed's doing some stuff. Each individual state is doing some stuff. USDA obviously is important. FHA. Mm-hmm. Do you see anything related to Fannie or Freddie at this point? Because that's what a lot of. In
terms of those agencies being impacted directly, no, not right now. But in part of the process of it originating a Fannie or Freddie loan, which is basically what we would call a conventional mortgage, you have to order 4506Ts, which is an IRS document to request a tax transcript. Well, the IRS, as we all know, most of those employees aren't working, even though I think they've kind of issued something where 50,000 employees can go back to work, but that's more to process tax returns. The items like requesting or sending out transcripts is not one of their priorities right now.
That's right.
So that will start delaying us on certain products for Fannie and Freddie if they're required. Not everyone, at one time, say 5 years ago, that was a big requirement where we had to have the transcripts on all loans. They've kind of loosened up a little bit in that area, and not all loan programs, or say individuals that apply, are required to have a 4506T signed and transcript returned. Okay. Yeah, so that is an impact that how it will affect the Fannie and Freddie conventional loan program.
Or do you feel like applications in general, because I know that's the Mortgage Bankers Association and a lot of real estate organizations based on how the real estate economy is working is based on mortgage applications. Do you see them being just normal or anything spiked or?
No, I haven't really seen an impact, and maybe it's just because of the area that we live in around here, which kind of helps things with us keep moving on a daily basis. But everything's been pretty smooth, even though you're hearing rumblings about things that, hey, if this goes on any longer, this could impact things.
Okay, so I guess, real quick, sum this up. No crazy impact, nothing crazy volatile at this point, but it is something to be aware of. You never know. And as a real estate investor, as a homeowner, these are things that you need to obviously be aware of because they could really, really impact you. How would you see, one last question, how would you, if you had a magic wand, how would you, what do you think is going to occur with just rates in general?
Crystal ball?
Crystal ball, yeah. Is that what it's called? Magic wand, crystal ball?
Yeah.
How would you see, what do you think the rates are going to do towards the end of the year?
Towards the end, I think we are going to see actually rates come down a little bit more. We've been seeing it actually over the past month or two. You know, we're back down into the lower 4s. We know we were approaching 5,
Yeah.
you know, like a couple months ago. So things have really taken a drop, and I think it may continue that way. I don't know if we're going to see those 3s again, mid 3s. We could, you know, we could touch the upper 3s
Sure.
possibly. I do think the economy's not as robust as everyone is maybe
Makes
touting.
it seem.
Yeah.
Well, I mean, there was a lot of stock market volatility, you know, over the New Year.
Yeah.
Over the New
Oh, wow.
Years, and
Right.
and there's an argument of how much that does affect or does not affect housing market or you know the rates, the mortgage interest rates
Right.
that everything's impacted
Right,
on.
and you know, there's the misconception, like when the Fed says, "Oh, we're going to raise rates."
Yeah.
A lot of times that doesn't impact mortgage rates.
That's
or
right.
Or it's already built in when there's that anticipation of
Sure.
the Fed doing that. Well, the mortgage rates react at that point, but then when the Fed goes to do it, you don't see the rates. Sometimes they go down. If it, like for
Yeah,
instance, if the Fed
that's
only
right.
raises a quarter, but they were anticipating a half, you may see mortgage rates actually drop. So, and again, I think the Feds may push back any future rate increases till later in the year, which again, that depends on how the economy's doing up until then.
Exactly.
So.
Well, I guess you heard it here first from my man Dino Broccolino. Rates are still good. Housing market's still good. I encourage you to now's the time.
Get out there and buy.
Go buy a house. Depending on where you're at currently, is there are refis still hot? Like are people
Well, they're
still doing
coming back.
refis?
Refis are hot because there is a lot of people that have arms that are resetting right now.
Got it.
And that is
So that's
causing
good to know.
people to come out and refi.
And there's no reason to just procrastinate on that. Like if that thing's
No.
resetting, take advantage of that.
Right,
Are you-
because it's tied usually to the LIBOR index or the 1-year Treasury, where they're at, say, I'm going to take a guess here, maybe in the 3 to 4 range.
Sure.
So I don't know if it's at 4, but and there's a margin tied to that, so you're going to be pushed into the 5% when that goes to reset. So it definitely behooves you to
Got it.
refinance sooner rather than later if you do have an adjustable rate mortgage.
Got it. If you're a homeowner, if you're an investor, reach out to Dino. We'll give you all his information at SunTrust because he's the man, and obviously you can tell he knows the market. Until next time.
Thanks, Jason.